We're allowed to work without it, it's supposed to be free.
Do you mind if I start?
Yes, sir.
I'd like to, call the County of Sullivan IDA meeting March 31st at 3:04 PM to order. Julio, can you do a roll call, please?
Yes, Mr. Siegel,
Present.
Mr. Siegel is president, Ms. Lara,
Here.
Ms. Lara is president, Mr. Smith.
Here.
Mr. Smith is president, Mr. Valone.
Yep.
Mr. Valone is president, Mr. Steingart.
Here.
Mr. Steingart is president, Mr. Brooks.
Here.
Mr. Brooks is president, and Mr. Corello.
Here.
Mr. Gunter is absent.
I'd like to have a moment of silence for, Mr. Brooks, who passed away today, he was a past legislator.
Thank you. I need an approval of the minutes of the February 10th meeting.
I'll move it.
Second.
All in favor?
Aye.
Any opposed? That's Kathleen and Joe. That's one, no. Scott,
What's his name?
what's his name down there,
I
Scott?
got that.
Okay. Bills and communications, what do our bills look like?
We have 5 total payments in an amount of 17,190.67 cents.
Anyone have any questions as it relates to that? Okay, I need a motion to accept that as being paid. Okay, so Sean and Scott. All in favor?
Aye.
Any opposed? Okay, so that moves forward. Staff report. Jen, you have any thoughts?
No updates. I would just like to mention that I just received the financial disclosure packets from the clerk of the legislature today, and there's several printed out on the table if you'd like to take one with you. I'll also email them out, and they're due back generally by May 15th.
Oh, nice, so we'll get those all done. We have with us today, which we appreciate, our accountant, Andrew Arias. We, are looking for the final audit statement and some thoughts. You know, the short version of what you think we're all about.
Right, just trying to be brief. You all have the presentation in front of you, so I'll just go through it briefly. Some of the highlights for the year for the IDA. The net position increased $118,000 this year. That was mainly due to a USDA grant you got for $93,000, which shows up as revenue, but you purchased equipment which gets capitalized, so it winds up increasing your net position until the equipment's depreciated. Lease income was down $5,000 due to the termination of the Catskill Brewery van lease. Interest income was up $8,000. That was because there was a lot of new loans issued in 23. And project fees up about 45. That fluctuates from year to year, obviously depending on the projects. Consult. It was, and so this year you have the full year, and plus there was a $20,000 Grow America. You'll see a repairs and maintenance for $10,000 for the Catskill Brewery van repairs for the lease that was terminated. Other expenses fairly consistent. On page 10 of the actual report, you can look at it and see comparative expenses. There was one new lease issued for $120,000. It was issued at the end of the year, so there were no payments on it. They'll start in 2025, and there were no new loans issued in 2024. Here's a chart over the last 5 years. Back in 2021, 22, you had a big difference between revenues and expenses. Those were the years that you had large project fees. So when you have those big project fees, you see that big gap. The last couple of years, they haven't been as large, so it's been pretty close. And here's your trend of your net position, and you can see again, back 20 to 22 is when your net position went up because of those significant project fees. And the restricted stays pretty consistent from year to year. Again, just briefly, I've gone through this the first couple of years, probably the last year I'll do, just reminding you how the GASB 87 lease reporting is. It's sort of not what you're used to. Normally you would just show lease income as whatever lease payments you receive, but now you have to show lease principal, lease interest, and different accounts. So basically, what you'll see is operating leases receivable and operating leases current, but it's offset by a deferred inflows of leases. So normally in operating leases, you wouldn't show a receivable. The new GASB 87, they want you to show a receivable, but then they offset it with this deferred inflow. So it doesn't affect your balance sheet, but it's on the book so you can see how many operating leases are owed to you. And on the income side, you have the interest income on the leases, for the operating leases, and the lease income is $118,000, plus the lease payments received is $133, and the operating lease income between the income and the interest is $133. So again, the income is the same thing. It's the same $133. It's just reported differently. So when you're looking at that, you're not just gonna see, you might look at that and say, geez, why is our operating leases 118? I thought we received more than that. And that's because it's split up with the interest. We test your pilot disbursements every year, agency fee and pilot, we make sure it's correct for the agreement. We make sure the pilot calculation is correct, dispersed to the proper municipality, and we also look to see that anybody who has not met the FTE requirements is paying the penalty. And we did pick up a couple this year, and they did pay the required penalty. We test all your other disbursements for proper approval, supporting documentation, cancel checks, posting into the general ledger, part of our control testing, make sure your controls are operating effectively. And then we do test a significant portion of your revenues. A lot of those are tested off of the original agreements, a lot of substantive testing in there based on the original pilot agreements that say what the annual agency fee is gonna be, things like that. No significant deficiencies. As a result of our testing, no material weaknesses, no written comments in the report. Couple of minor things we usually will talk every year with Jen and Julio about, just to go through it as verbal comments. If it's something that recurs every year, it may become a written comment. Usually they address any issues that we bring up. You get an unmodified opinion on your financial statements, means everything's in accordance with generally accepted accounting principles, which we call clean on it. Anybody have any questions?
No, you wanna do the,
We'll write through the other ones real quick if you like.
Yep.
Okay, we'll start with the funding court. Just a reminding, it's also subject to government auditing standards. It is considered a government entity. Those reports are in the final 2 pages. We do the same thing. We test the controls over the activity, make sure it has all the proper approvals, supporting documentation. We trace it to the bank statement. We make sure everything has the 2 signatures as required. Bank reconciliations, we check to make sure somebody is reviewing those bank reconciliations and signing off on them. And adjusting journal entries, we test, we make sure they're supporting documentation for any adjustments made into the accounting records. That way we're testing anything, receipts, disbursements, and adjustments into those accounting records. $728,000 increase in net position, mainly due to the transfer of the revolving loans from Sullivan County. It was $986,742 in cash and $244 in revolving loans. And then you also paid out $200,000 to the Catskill Regional Food Hub. So the difference between those two is pretty much what your increase in that position is, $728,000. Some of the changes in activity from the prior year, reduction in the marketing, as we spoke about with the IDA. They had no more marketing expenses to Sullivan County funding. They ended in the middle of last year. Sullivan County IDA took it over, so you'll see no expenses way down there. Consulting expenses were down $17,000. In 23, there was $11,000 for a land survey. And prepaid insurance was reported for the first time in 23. We didn't make any adjustments because the amount was not material, so it was sort of like a half-year expense last year. This year is what the normal insurance expense will be going forward. Your revolving loan activity, no new loans issued. 41.5 was repaid on the existing funding loans. 49 was repaid on the Sullivan County transfer loans. And 39,000 in some of those loans that were transferred from Sullivan County were written off by the board as uncollected. And your interest income was up about 3,000, mainly due to the new loans. And again, funding also gets an unmodified opinion on the financial statements, which I'm cleaning.
thank you, and the infrastructure.
And top part, same thing, again, going through all the testing that we do as part of the government audit, we have to test your controls, understand them, make sure you have controls in place. Cash receipts, obviously tested substantively, you pretty much have the special assessments and your investment income. There's a $1.27 million decrease in net position, and really what that is the difference between your bond principal and your depreciation. So right now, you're getting funded for those bond payments through your special assessment, and the bond principal payment right now is less than your depreciation expense. So your net position is gonna go down, down, down. Eventually, when the principal is higher than the depreciation, it'll reverse and go the other way around. So after 30 years, it'll all wash itself out. So it's more of a timing issue, the way that works. Because the depreciation obviously is straight line and the bond principal is not gonna be straight line. Change in that position was similar to the previous year. You had a $124,000 decrease in your special assessment, which of course is based on the needs for the year for the infrastructure. $12,000 decrease in investment income, and a $99,000 decrease in the interest, because obviously as the bonds get paid off, the interest is gonna be down every year. There also was a $35,000 decrease in administrative expenses. If you remember last year, you had to pay back years to town of Thompson, $5,000 annual fee that wasn't paid from 17 through 22. So that was all paid in 1 year last year. Now it's back to just a 5,000 annual amount. So your administrative fees are down. And you also get an unmodified opinion, which is a clean one.
So, are there any questions? I'd like to thank you for all the hard work, but even more so, I'd like to thank the IDA staff because the amount of effort and work that all three of you put forth, four of you as well, but the inside is huge. And they protect us and really work well with you. So you guys, thank you for that. I think it's great.
And I say it every year, I like to say, every time we ask for something, they have a spreadsheet for it. You know, sometimes you go there and you ask, I don't know, I'll try to find it. No, where'd you get this number? Boom, there's a spreadsheet. Where'd you get this number? There's a spreadsheet. And then we can audit that spreadsheet. We're not trying to figure things out and back in things. And you're right, your staff is really on top of all the details. There's a lot of details.
They make our life much easier than they have to. So we appreciate that.
Especially with the IDA, with all those spreadsheets for everything that's going on.
All right, thank you, Ian.
Okay?
Okay. You're welcome to stay, but you're also welcome to leave.
Yeah, I gotta get back to the office. I'm busy this time of year too.
Well, that's a plus.
Thanks very much.
All right, take care.
So I'd like to start discussing what?
Let's do the resolutions.
Yep,
So,
that's
well-
what I was gonna do.
Great.
That's where I'm at. What, you were,
Can we do the, so can we do the Paris as well? So the audit report is built into the Paris reports.
okay,
And there's a,
Motion to approve the Paris report
Yes.
submission as provided in our packet.
yeah,
so
the-
Sean just made that motion.
I'll second.
Kathleen seconded that motion. All in favor?
Thank you.
Aye. Any opposed? Okay, so moved. Is that okay? We're good?
Perfect, yes.
I'd like to jump into these. I don't want to bulk them doing this bulk, so I'm gonna go through them fairly quickly because you've seen them. Everybody's gotten this agenda in advance. So we've done that. So the resolution, the first one is authorizing the agency to provide funding to the Partnership for Economic Development, Sullivan County for the first quarter. We do that every quarter. It's the same amount.
Moved by Sean.
Seconded by Ira.
Yeah.
All in favor?
Aye.
Any opposed? Okay, that's carried. We're also extending the sales tax abatement, the second one, for Homestead LLC in North Branch Cider Mill project from April 1 through and including September 30th, 25 for more work that they're doing, correct?
Correct.
Okay, I need a motion. Joey,
Second.
Kathleen, all in favor? Any opposed?
Okay,
All right, the third one is extending the sales tax abatement period for the Fay Hospitality Catskills LLC project from April 1, 25 through September 30th, 25 for more work that they are doing, correct?
Yes.
yeah, do we get reports from them? Yes. On a quarterly basis.
Okay, so that's Kathleen is
Yep.
going to, and Scott's gonna second that.
Sure.
And all in favor?
Aye.
Any opposed? Okay, the next one is extending the sales tax abatement period for the New York Thompson 3 LLC project from April 1 through and including September 30th. Which one is that?
That's old
That's
17.
old 17. You're recusing yourself.
Okay, so I'm recusing myself from the motion.
I'll make the motion.
All in favor?
Aye.
I'm recusing, so that's passed.
Who moved that?
I did.
Kathleen? And who seconded it? Joe.
All right, the next one is authorizing the execution and delivery of a mortgage to secure a loan from Live Oak Bank, New York, Forestburg LLC in an original principal amount of $4,300,000, which we need to
You're
talk
also
about.
abstaining on that.
Okay. So what is that?
That's the mortgage on the 2380 Route 42 solar project in the town.
Okay, so I'm recusing myself on that, but I need a motion. Ira will make the motion, Sean just seconded it. All in favor?
Aye.
Any opposed? Okay, so that's carried. A quick discussion, board member self-evaluation. Does anybody, we've done that on a regular basis, self-evaluation about understanding our mission, our goals, our thought process, anything irregular, anything that, you know, we're afraid that we feel like we're going too fast in a meeting, et cetera. Does anybody want to discuss that?
We've got the tallies here.
Okay, so we're in good shape with that. We need a motion? That's a discussion.
That's it.
Okay, and then the last discussion, is a request for finance related to Montreal Resort. Isn't that something that we can go into?
We need to go
executive
into
session?
executive session
So-
because it involves the financial status of a particular person or entity.
Great.
Make a motion to go into executive session.
Ira,
Second.
Kathleen, we are now in executive session.